WeWork's finally found a way out of its financial troubles. The office sharing company's been burning through its cash reserves and was expected to run out of money this month. But now its directors have struck a deal with the Japanese conglomerate Softbank, which is WeWork's biggest backer. It'll fill the firm's depleting coffers, but shows WeWork's co-founder Adam Neumann the door. The deal values WeWork at nearly $8 billion. Nuemann will get $1.7 billion for giving up his voting rights to Softbank. And the new owner will also dole out $50 million to JP Morgan for helping to raise another $5 billion in funding for WeWork. Well, for more on this, Santosh Rao joins us now from New York. He's the head of research for Manhattan Venture Partners. Good to have you back with us, Santosh. Now, Softbank founder Masayoshi Son was probably Adam Neumann's biggest fan in terms of the sheer amount of money that he sunk into WeWork. Why is he now forcing Neumann out of the company that he founded?
Yep. So essentially, it was a bet that he made that failed. He, in fact, I would say, aggravated the situation more than helped WeWork. I think there was an element of risk that was way beyond reason. So in a way, Softbank bears the blame for what WeWork is today. Yes, it was growing, but it was probably growing too fast. And they totally overlooked the fact that the corporate governance structure and the way he was running, he was not the right person to do it. Of course, he had the charisma and the idea, but he was not what WeWork needed as it came to the public market. So I think at this point, Softbank pretty much owns the problem, is coming in with both feet, and they're going to take over. And that's the only solution that I can think of that will work for WeWork.
Now, WeWork has grown from a single office in New York to more than 500 locations in dozens of countries around the world, but somehow it managed to lose about $900 million in the first 6 months of this year. Why is it going so badly for the company?
Yeah, see, the way it has, I mean, we looked at this company closely. We did not invest in it, of course, but we looked at it. See, what happens is in this business, there is an upfront cost. As you get into these long-term leases, there are some payments involved, there's renovation involved. So as the company themselves said, look at it as an investment. So it pays off over time. These are like leases over time, 15-year leases or whatever. So it pays off. So I think the upfront cost is what the headline is, and that's what's scaring people. And it's a risky business. I mean, you're entering long-term leases, renting it out on short-term leases. So it's like a savings and loan association model, which is very risky if the economy goes south and the vacancy rates go up. So, but having said that, they have provided a good service. They have reshaped the leasing model. They have given incentives to new companies, to entrepreneurs and all that. And the sharing space is only 1% penetrated of the total lease space in the US and outside the US. So it's a lot of penetration to be had. It's in the right space, but it just needs to manage costs, grow at a reasonable cost, not at any cost. And that's the problem.
Now, this Softbank deal effectively values WeWork at around $8 billion, which, as we know, is a far cry from the $47 billion that it was valued at only in January. Do you think this now paves the way for an IPO to actually happen? We know that there was a lot of excitement about a public offering some months ago, which was shelved. But do you think this new takeover might actually mean that one can happen?
Yes, I think he's appointed a new CEO, acting CEO. They're going to clean up shop, just shape up the whole business. And at this valuation, it makes sense. It's a global play, and SoftBank is playing the long game. That $47 billion, in all likelihood, was based on a 10 or 20-year model. it definitely was not a near-term model, near-term valuation. So, but when it comes to public market, it's a one-year horizon that investors are looking at, 1 to 2 years. So it just looked totally out of place. So at 8 billion, it's a good entry point to get in. But let's hope that they clean out everything. There is demand for this space. There is growth area. They have good properties all over. So there is definitely space, and SoftBank is behind them now. They're fully invested. They already had 10 billion. They're putting in more 5 billion. So they are all in, and they're going to run a tight ship. So I think going forward, this will be a good business. Let's see when they come to market. They might take some time to kind of clean out everything, lay off people, hire new people. So there's a lot of moving parts at this point, but I'm sure in 6 to 9 months, they'll be in a better shape, a better narrative, a better story to tell, and come out at a reasonable valuation.
Okay, Santosh Rao, we'll have to leave it there, but thank you for your analysis as always.